Hi everybody, Eddie here. Going to do a market update for next week. So we had a really bullish week after CPI numbers came out. So last week, I was telling my Discord members that I was seeing there's a huge amount of puts being bought for this week's expiration, and it could trigger a massive short squeeze because when there is excessive amount short in the markets, the market makers actually have to hedge it by shorting the index down. And then when they approach expiration day, all those people that bought puts, well, the market maker is going to collect all their premiums and making them go worthless. That's how they make their money, right? So they had to unhedge and pushing the market back up to higher so that all the put strikes get expired worthless and they get to make the maximum amount of money on both sides of the trade because their job is to collect premiums from retailers and people hedging and stuff like that to make money, right? So that's what happened. So on Thursday, after CPI numbers came out, the numbers were better than expected. So you kind of feel excessive buying because all the people that are short, they're covering, market makers on hedging, and then everybody else is starting buying because of the CPI numbers, which creates this massive squeeze, right? So that's how we got that huge gap up right before market open. I actually made quite a bit of money before that. I did a long straddle and some long strangles, which worked out great. I just wish I held them a little bit longer throughout the day. I exited them at the open for almost 80% gain right from the start, and then you actually start trending up right from the open. So it was more of a gap and go scenario, and it was a huge day. I actually hit a career high on that day, and a lot of people in our Discord room made a lot of money on that day as well. So these type of days they don't come that often. I usually try to take advantage of it and go bigger size. So that's what we did, especially that rally towards the last hour of the day. I was telling people in Discord that how there was massive amount of volume start picking up after the breakout of the high of the day. So it just kept going and going and going for like the last hour. Volume just increasing like crazy. So that's when you know that a lot of funds are actually start deploying some capital to work, right? So anyway, for the chart, so this is the day of the CPI. As you can see, we broke that heavy resistance at 3,900. So that was the key area that we were looking for. You can see the last week top this area with the arrow. So we broke right through that, and then as soon as we broke right through it, we ended the day at right here at close to 4,000. It's 39.90. So that's right around this peak right here on these previous candles. And then on Friday, we had like a consolidation most of the day, and then on the last hour we got that big push up towards 4,000. So that was the psychological target that we were going to test, and then we did exactly that. So now if we get a continuation, I suspect that we'll close this gap right here on this side over here. So that's right around that 200-day moving average, and that's also the target. Psychologically, 4,100, right? You may want to test this high beforehand, before the reversal. Right, we are very extended away from the 8 and 21, so a consolidation or a reversion back to retest this level before going higher is can happen, right? Because once you get too far extended, it needs to cool down a bit. So to cool down, if it consolidates, you'll start the 8 and 21-day moving average will start catch up to the price, and then you'll break out and continue higher. Or if we just come back, retest this area. All right, retest at 3,900, let the 8 and 21 catch up, and then we get our next leg up and go test this level up here of 4,100. And once that breaks through, we're looking about 4,200, and then it's this high right here. I don't think we'll go straight up from that. It's more like go up, test, come back, retest this breakout area, and then if he holds and if there's increasing volume, then you can expect a breakout of the 200-day moving average, and then we can call this the temporary bottom, right? So CPI numbers are showing signs that inflation is slowing down or coming down. So this could be the peak inflation area. And if that happens, a lot of people will start buying this market back up. And it doesn't take long to go back to the highs because there's so many people shorting that it's going to create like a massive short squeeze. So we talked about that last week about the massive short squeeze, and we're getting signs of that the last couple of days, right? So if it continues, we're going to hit this area right here and most likely get rejected and then come retest this level back here, right? If we look on the weekly, it's a very bullish looking chart, right? So we're not quite out of the woods yet. It really needs to break out of this consolidation area, which is 4,100. All right. If we break out of here, retest this area, and then come back and retest this breakout and then go higher, that will be a very good sustainable rally. And then we most likely can call this a bottom. If it doesn't, we just come test here and come right back down, right? We could get a pretty big rejection right up here. Right? We would come all the way back down to the bottom of the range, right? Because we're in the upper part of this megaphone. Megaphone is an expanding wedge on the other direction, so it goes a lot higher and then it goes a lot lower, right? So that's a very key area to watch, is that 4,100, right? That's a very, very important level to watch for next week. If we can break through that, then we can call this a temporary bottom and a momentum shift, because we held this weekly 200-day moving average. That's also where the 50-day is, and that's been rejected the last time we had this big rally. So this time we're looking for it to test it, come back, retest this breakout range, and then break out of it, right? If we can break out of this 50-day moving average, then we can call this a bottom. If we can't, right, we're still in the bear territory, right? So that's the key area you really, really want to watch. And on Monday next week, right, if you look at the hourly, we're just right around the 8-day moving average right here. So once that start breaking down, we will get a reversal back down, right? So we do reverse back down. It's going to test this breakout area, which is the 21-day hourly moving average, right? So it can come back, retest this area, and then we get our next leg up. And that will be a much better breakout than just going straight up, because anything that goes straight up, it comes straight back down. So it's more like a FOMO, short squeeze rally type of thing. And those are usually temporary. So when they get too extended, they come right back down just as fast. So I don't want to see that. I want to see more of a sustainable rally. So a reversion back into this 3,900 for a test and then go higher is much more sustainable for continuation than just doing this, right? So it's doing this right now. So I expect it to come back, retest this, and then come up and test, and then retest this there and go higher, right? So that is how good reversals happen and more sustainable rallies happen, is going like in this direction, right? If it just goes straight up, hits right here, goes straight up, and then it's likely it's just going to come right back down and go retest like this. It'll come down very sharply if it goes up too fast, right? Because you want people to slowly accumulate funds, start accumulating shares and see accumulation for the longer term, not for these big FOMO rallies where they just go fly right up and then get rejected hard and then we go up hard, right? That's still in bear market, right? This is when it goes that faster, they're usually just bear market rallies and not a trend change, right? What I want to see is a trend change so that we can call this a bottom, right? We don't see it just yet. There's early signs of it, but it's not quite there yet. We really need to break out of this 4,200 area before we can see something like that. So I'll just keep that in mind for now, that this is the start of a move, but not a confirmation, right? We're still waiting for confirmation of a breakout. Right, but it's a very good early sign. So on Monday, it would be great if we actually come back, test 3,900, and then rally back up towards the end of the week. That would be a much more believable rally, right? And it is extended. So if you measure this move right here, we actually hit that 1.618 level. So a 50% retracement off that level is expected. So if you measure that, that's right around the breakout areas, the 3.82, we come slightly below it. It will be the 0.5, which is right here. So as long as you can stay above 38.70, then this it can still continue higher, right? If we come back and we start filling this gap right here, then most likely that this rally's over, right? And then we come back and and it might just chop around for a little bit, right? Anyway, that's the expectation for next week for SPX. Let's take a look at the other indexes. So Qs actually went up quite a bit. The Qs are doing really well. It finally broke out of this very hard resistance area. So this is a key area to break out of. Just like last time, it did the exact same thing right here, right? It retested 3 times, like right here, 1, 2, 3, and then on the fourth, you finally break out, retest, and then went higher. So it's the same scenario right here. So we're looking forward to actually come up, test this 295 maybe, and then come back, retest this 285 area, 280, yeah, around that 284, 285 area, and then go higher. Right. So if that's the case, then we're going to get a pretty strong rally into 200-day moving average. And that's really the target for now. Until we break through that, that is the target to take profits. That's also where short sellers will start coming in heavy. Is also around this 200-day moving average. So it will be more of a battle of who's going to win, of bears, bulls or bears going to fight it over at this area. So, so keep close attention to this area. Maybe set an alert, right, to see if it'll break above it. If it breaks above it, then that's a good early indication that potentially we hit a bottom in this market. All right, let's take a look of small caps and mid caps. So mid caps is doing really well. This is MDY. It's getting actually pre-extended already from the bottom. So we had a double bottom. It's creating like a W pattern right here. So I am looking forward to break above this area, right? Once you break above this area, it's going to go, right? It's going to test the highs again, right? So that could be the way it's going to go, right? Because right now the mid caps are struggling, and the mid caps are actually performing. So maybe the mid caps is what's going to lead out of this bear market, right? So as you can see, it's already above the 200-day moving average, right? That's a really, really good sign. Although this is more of a reversal pattern right here, where it's a doji extend away from the 8. So we're going to come back and we're going to retest that next week probably. So around 450 retest. If you actually retest and holds, we're going to expect it to come up to 485, 483, 485 area. All right. And then if it breaks through this area, as you can see, this was a heavy resistance also where all the supplies are, right? If you can break through that, that's a big demand to break through that, right? And you can call this a bottom when it breaks through all of that supplied up here, right? So that is also the target for the mid caps. So watch this level very carefully to see if we will break through it. If we get a full rejection off this area, then pay attention to this area to see if it'll hold. If it holds, we can go back and break the highs again. If it does not hold, we're gonna come all the way back down. Right. So just keep an eye out for that. That can be an early indicator because it looks like it's leading the market right now because it's above the 200-day moving average, and the Qs and the SPY is still below it, right? Same with IWM, we broke above the 200 just slightly. We do get a reversal doji, right? Reversal hammer actually. So next week we could get a pullback. But hopefully, if he pulls back and then just hold on to the 8 and then finally break through it with volume, then expect we're going to come test this 209 area. This is a very heavy resistance as this is the low before the breakdown, right? So we come back and retest this area and then most likely pull back a bit and then break out, right? So if there's momentum, this is the bottom. That's what's likely to happen is same scenario to mid caps is you want to come up, retest, and breakout, right? So that's the type of move that we're looking for, and that will create like a W bottom which is a double bottom type of reversal, and then we right here's the neckline, and then that's the extension is all the way up here to the highs, right? So if inflation is going to start coming down rapidly, and then the Fed start pivoting, we're gonna get that FOMO rally. And it's going to be quick and furious. And these small caps, mid caps, they tend to move really, really fast, like it did right over here. They're going to make these parabolic moves. So like all your high growth names, like your Kathy Wood type of stocks, they're going to start exploding up on short squeezes because there's so many people shorting those. So once that short squeeze is triggered, you're going to get these huge parabolic moves, and you can make some substantial amount of money if you can catch them, right? And usually for stuff like that, I don't need a big investment to catch a lot of money off the place like that. So you can nibble at it, and then if it does break out of these areas, then go for it. Right. So if you look, SPYV, SPYG, V is value. Value is already extended, and on Friday, it actually didn't move that much. But look at the growth. The growth themes, they're substantially down, right? But it's starting to catch up momentum. It's significantly higher than the value name, so there is a little bit of rotation of money right there. So you can see growth is struggling mostly because all the FANG stocks are down hard, like your Microsoft, your Apples, your Googles, your Amazon. It's down a lot. So that's why it's been struggling lately. But it looks like it's breaking out of this area, and then it's starting to climb. It does have some catching up to do to hit the 200. Value names already above it, right? So that's a good sign that value is above 200. So if things go well and growth come back, and growth usually come back pretty quickly, so we can pull ourselves above the 200 on the overall index, and then we just going to end up going much, much higher after that, right? So let's take a look at ARK. So you can see right here on the volume, zoom out, see the massive amount of volume coming through at these areas right here at 35, right? You can see the volume right here. There's huge demand for it around these levels right here. And so you can see the 200-day move average is getting very close to the price action, right? In high growth names, when he bases like this and the 200 catches up, what happens next is the explosion of the move breaking out, right? You may not get it all the way back up to the highs, but you can still catch huge moves from here to $70. That's almost a double, right? If it hits 80, it'll be a double, right? That's this resistance right here. And then it continues. It can hit over $100 again, right? That would be most likely the target, 100, right? Maybe 125 if it really goes, but these stocks, they tend to move really, really fast when demand is there, right? So when money start coming through, these just kind of explode up. But right now it's not quite there yet. It needs to base for a while before we can do something like that. So if you look over here, that's what happened, right? There's a big long base, and then finally the massive breakout, right? So right now it's just starting. It's not quite there yet, but you can see that there's volume coming through, so there's a lot of interest going. So it might be just be a quick trade for now, and then we most likely, if there's a trigger of a short squeeze, we'll hit this area right here, this area, and then most likely get rejected around right here. So if he does go, this is your target. If he hits, take your profits quick, right? Let's see. Energy stocks are hitting almost a double top now. So if once you start hitting the double tops, you want to see if you're actually going to break out to make another higher leg, or is it actually going to break down, right? So you can see right here the volume is dropping substantially on as it start going up. So that's a weak sign that on demand, right? So likely there's a rejection because when things are good, you see volume actually increases higher and higher and higher on the way up. But as you can see right here, as the stock going higher, volume's decreasing, right? So that means a lot of funds, or there's no new fund buying in energy stocks, right? So be very careful when holding energy names at the tops, because they come down really, really fast, right? So just pay attention to that. All right, let's look at some stocks. Apple is still holding this area very nicely. Right, this area right here, it is a head and shoulder pattern, but it's bouncing off this level, right? These head and shoulder patterns, they make great supports if it bounces, but if it breaks, that's when things get really, really bad, right? So far it's holding, so that's a good sign. And if it breaks above this say 160 area, then it's a really good sign. Then we're most likely going to test 175, right? But pay very close attention to this level right here. If it breaks below it, 130 will be the area. If it breaks below it, then it's likely to come down to $100 if it breaks below that area. AMD, right? AMD, like I said, I'm still not trading the chips. It is heading towards this heavy resistance area right here around 80. So that was a temporary target from this bottom right here. So that was still a really, really good trade if you did the trade. So but the target's right here. So around as it reaches around this $80 area, this is where you want to start taking some profits and scaling out your trade, because most likely it will get rejected around this 85 area. So and the chips are still not a great place to be, but because there's so many people shorting it, we would get like these massive short squeezes like you see right here. Amazon, so Amazon break through this massive support level, and then right now it's coming back up. It's going to hit this as a resistance. You want to see if this holds. If it does not hold, likely it's going to drag the index down as well. And because the index is so far away from the 8, we could get like a little reversal, right? So if it does, you'll most likely come back and retest this low, because this is a you look at the shelf right here, this is a high demand zone. So if it retests this and holds, it will create a much more sustainable rally up as well. Meta showing some sign of life, most likely going for that gap fill and then continuation down. So there's a short trade there. It may come back to test this area 170 at the most, but anyways, it's not a long-term stock. It's more for trade at the moment. So if you're going to trade that, keep a stop like right here at 103. Google's bouncing off this area right here. So I was saying this is the first buy zone. So if you bought some right here, you made some pretty good gains already. And then it's likely to test this area, which is a very important area, 105. If you can break 105, it's going to 116, 115, 116, this area right here. And this is a very important level. Most likely get rejected up here if there's not enough demand, because that's a very high volume area that right here at the peak of the volume shelf, right? If you can break through here though, it's going to come all the way back up to test like this region right here, 135 to the highs at 150, right? And Microsoft, same thing. It's bouncing off the demand zone right here, the first one. So it looked like it bounced. It's retesting this area right here. They're still showing signs of weakness, because on the index already broke through it, but all these big cap names are not breaking through just yet. So that's still a sign of weakness in the markets, right? Because these names should be leading out of the market, but it's not, right? So you just want to be very careful with these rallies, because they can be bear rallies until the 200 breaks through. Once the 200 breaks through, then you can be more relaxed about it, right? But at the moment, it's hitting some of these critical areas of resistance. So you want to be very cautious on how it moves from here. Once it breaks out, you can create like a big rally, right? But if it doesn't, it gets rejected, it can be a pretty hard rejection. So that's why I always take profits and then I wait for confirmation and then go in for the trade. Your target right here is 270, right? So that was a pretty good bounce from 210. So if it hits 270 and start reversing, right, you want to see a breakout here, hit 270, sorry, come back, retest, and then break out, right? That would be a much better move. Netflix is on its way for gap fill, so it found support right here, right? So it went up, came back, retested 200, which held, and now we're going up. So that there could be a trade from here to 330. So if you want to trade this, You can go in with a shares, short-term call, or you can sell some spreads below this area right here. Sell some puts too if you want, and it could be a good play, right? Nvidia has a pretty sharp bounce off this demand zone, right? So I was saying this is a very high demand zone. As you can see, this is a giant volume around this price. So once you break above it, right, demand's taken over. It's going to try to retest its 180 to see if it'll break through. If it doesn't break through, it's going to come back. Maybe retest that 140 area before we're breaking up above the 200. Tesla is right at the neckline. So this 180 area is very, very important for it to hold. If it doesn't hold this area, it's coming down to 140. 140 doesn't always come to 60. So, this could be like the start of a waterfall if it breaks this 180 area. What you want to see right now is huge volume. It is pretty good on the volume right now. You want to see huge volume. You want to see it break back above 200 and come up to 230 and hold here. You can consolidate up here, let the 200-day moving average catch up, and then a breakout, right? Otherwise, it's a painful way down, right? So this is a giant head and shoulders pattern, right? So like I said, these giant head and shoulders patterns, they either make great supports or they completely break down. So yeah, hopefully it'll hold because this does make a substantial portion of the index right now, and you can drag the index down if it breaks down. So anyways, that's pretty much it for the stocks and the market update. So watch carefully next week, see what's going to happen. Those key levels are what you want to trade off, and at the moment I'm still just day trading. I actually did buy some Chinese stocks this week. Let's take a look. So I did buy some Chinese stocks from this bounce right here. And because there are some news events around this, so if this is the bottom, there's a big long way back up because these names are like highly discounted right now, and they're trading at super cheap valuations. The most risk that you're gonna have is political, right? There's nothing changed about these companies. Like, they're still performing really well and they're still making a lot of money. It's just that it's political, is in China. So that's your only risk. But if that risk is gone, you can see these stocks go flying, right? Because they should be trading somewhere around up here, not down here. So you could get a quick double on that if things work well. Let's take a look at the algo this week. So this week's just killing of the algo. So this is Friday. All right, Friday we got the short sell right from the start. Pre-market we came down. Once we hit this support right here, we bounced. I got our buy signal right up here. You can ride it up to the pre-market high. Got our sell signal, came back, retest the lows, got our buy signal, and then we end up breaking out of this area. This is what the area that I was telling the group about, right? And then we flew up, right? We came up and we didn't get ourselves until towards closing time. So if you catch this one wave, you would have made some substantial amount of money, right? So this is a fairly good sized wave to trade with, right? Now on Thursday we got the buy before CPI numbers, right? So if you actually follow this and actually went with it, let me see if I could show. So right here on different time frames, right? So you can see that it got the buy signal before the CPI numbers came out, right? So if you actually went with the aggro, you would have caught pre-market this entire move up, which I did. Except for I bought the strangles and straddles for this because I was unsure how sustainable the move was going to be. So I did that. I did buy some auto calls, which worked out. And then at the open, it didn't trigger a sell sign. It went straight up until we get a reversal up here, right? Towards the mid-afternoon highs. And then we get like a little reversal back down, retest this open and range area, breakout area, and then it got our buy signal, and then you could have ride it all the way to closing time, right? So just the last 2 days, you could have made substantial amount of money and could pay for like years worth of subscription fees, if that's what you're thinking, right? Right now I am offering the aggro for 1 month for free. If you got the Discord monthly membership, you'll get it for free for a month, and then you would need to get the annual subscription to use the aggro for the year. Right. And if you can look at even these choppy days that we had, once you get that trend, you're going to catch the entire trend down. Right. So like, look at these days before, like big ups, big downs, it catches them all. Right. It absolutely catches them all. And if you're a disciplined trader, even in these range trades like this, right, you might not be able to make money, but if you have pretty good risk control, well, you'll be breaking even or making small bits of money right here, but you'll, at the end of the day, you would have made all your money, right? Because once it breaks out of these consolidation ranges, that's where the money's going to be. Once you start trending, that's where the money will be, right? So if you look back all of these days, you could have catch these really good moves throughout the entire week, right? And all you have to do is catch a few days of these, and you will make substantial amount of money. And the days that it's wrong, you're gonna lose a little bit of money, because as long as you apply risk management to your trades, you should do fine with this algo, even if you don't know your technicals. All right. But if you do know your technicals, then this is where it really shines, because this if you know your technicals, you can use this as a confirmation what you see, and then allow you to hold on to your trades much longer, so you can make maximum amount of profits, right? So if you catch these big giant moves like this, like one of these moves, that's enough to pay for like a month's salary. If you don't even need good size for a move like that, right? Because that's like almost like 100-point move on the SPX. So when you get a giant move like that, and you're in it even with one contract, that's $10,000 with one contract or more, right? If you have like 2 or 3 contracts, it could be a really good, that's like somebody's annual salary in a day, right? So, this is a really good algorithm. I tweak it perfectly almost for day trading, for confirmation use. And like on these days, even the chop days, I mean, you can catch these mini waves with shares, right? It doesn't work well with options when it's choppy like this, but if you're trading shares or you're trading futures, it still work perfectly fine, because you're using physical stop losses for these type of trades. Once you enter a trade, all you do is set a stop loss, and if it goes, you make money. If it doesn't go, you get out with a small loss, right? And then you go set your stop right here, buy right here, you caught this move, you get your sell signal, lock it in, short it down, set your stop up top, break it down to here, double bottom, take your profits. You could ride these type of waves all the time throughout the day with shares and futures, right? And then you get days like these where you ride it all the way up, right, all the way to the close, right? And then you make a huge amount of money on days like these. And then on these choppy days, you make a little bit, because you can't win them all. But if you're good at risk management, you should be able to be positive by the end of the day, right? Anyways, that's it for this video. Please like and subscribe, and I'll see you guys in Discord.